Hello, good evening today, and we are here for our traders talk every Tuesday. And my name is Meng Hon, and it's good to see you guys today. Just let me put this on silent first. Okay, great for you. For those who are joining me, thank you for joining me. And then if you can actually hear me, give me a thumbs up. If you can hear me, give me a thumbs up. And for those who are joining me for the first time, welcome to Traders Talk. And this is a show where I actually give information on financial literacy, and also at the same time do a little training for people who actually aspire to learn how to trade the stock market using options. Yeah, and I will also share a bit more on other things like markets, how was the market last week, and basically also give a little view on what is actually expected in the coming week, which is this week. Yeah, and great. And as usual, before I start, if you can actually like and share, then that will be great, because more people will be able to actually see this. And I would normally start off my trader's talk with something which I actually wrote about in my newsletter. Yeah, if you do not know, I also do a newsletter which I issue every week to people who connect with me. Yeah, and of course, for those who also want to see this newsletter, you can also see some free issues. Let me just put it out. Where is the newsletter? Yeah. You can actually see the link there. You can actually go to the link and view a copy of the newsletter, where I also share tips and trainings about trading the stock market using options. Yeah, and this week I actually wrote about something very interesting. Just let me put it up here. I wrote something about a little bit about my childhood, which I will actually share the story with you guys. And then we will move on to the topic which we'll cover today on the trading. Yeah. So this week basically I wrote about imagine. Yeah. Okay. What this imagine is, the question is, of course, imagine what is possible. Imagine what is possible if money was not a problem. Yeah. If money was not a problem, imagine what is possible. If you can see in the picture here, if you can actually see in the picture here, what we have, of course, if money was not a problem, car is not a problem, shopping for food is not a problem, going for holidays is not a problem, with your family, yeah, and then buying other things, houses and all these kind of things is not a problem. Yeah, actually a lot of people also say or give a view or comment that actually money is not everything. Money is not everything. Health is more important. And of course, I do agree with them to a certain extent. And of course, although money is not everything, money is actually an important element in everybody's life. Yeah, because without money, you could get sick, and you do not have enough money or funds to actually cure you. Or if you don't have money, you also cannot do a lot of things which you like or you love or which your family loves. So at the end of the day, we have to actually take care this part about money, that we can continually generate income to actually satisfy a little part of our life, which will actually provide for us in a much abundant way. Yeah, and I recall what happened, of course, is that when we are small, or when we are young, right? We actually do a lot, imagine a lot of things. We imagine when we grow up what we want to become. We imagine that one day we can become rich. Yeah, that we can actually buy our dream car, buy our house, buy a house for our bungalow for our parents and all these kind of things. So that was actually when we are young, you see. So even for myself, it's actually also the same. So before you even started to actually go to work, right? Last time when kids are young, or during holidays, most of us actually go to work to actually generate income, because the parents won't give you money. Because the parents won't give you money. And unlike nowadays, the children don't need to actually put up so much effort to get money. See? Whereas when we were kids 30 years ago, we need to actually go and find our own money. So I recall after I finished my Form 5, right, what me and a couple of my friends did was we went to actually look for jobs. Yeah, this is very common. We went to look for jobs to see how we can actually make some money before we actually continue our studies in Form 6, waiting for the Form 5 SPM results. Yeah. So of course, what happened back then was actually we went to find a job, and we actually saw on the newspaper cutting, right? Salesman needed, salesman, right? Salesman. We were just about 15 years old, and we saw a paper cutting salesman needed five-figure income. So we were intrigued with that advertisement, and we actually started to call this number on the newspaper and say, what is it about? And the person said, come over, and we will actually let you know and also interview you for this job. So a couple of us actually went to this place. I think, where was it? It's actually in Jalan Ipoh. I forgot what's the building name. It's actually in Jalan Ipoh. One of the old buildings behind the Bak Kut Teh stores there. Yeah. So we went I think about 3 or 4 of us went. And then when we went there, it's just a normal setup office, very plain. And there were some people who actually greeted us and brought us in. Yeah. So there were a lot of people. I mean, maybe about 6 or 7 people during that day, and they sat us in the room. Yeah, in a room. And then they started to actually talk about what they do. And they said that we are actually promoting vacuum cleaners. We are actually promoting vacuum cleaners. So we were like, oh, vacuum cleaners. What do we know about vacuum cleaners? So they said, we are promoting a vacuum cleaner. This is actually a big brand in US. And this is vacuum cleaner is actually very good. So what we need you guys to do is actually to go out and actually sell this vacuum cleaner. And if you are successful in selling this vacuum cleaner, you will be actually getting paid about more than $10,000. They say more than $10,000. And when we have some people, they shown that we have some people, these are the few people who actually make more than $10,000 a month. Yeah. And one of those guys I recall was our friend. His name is Jeffrey, and he was actually there earlier than us. He started earlier than us, and he was already doing $4,000 or $5,000. Yeah. So you're like, oh, Ken, if my friend there can do it, we should be able to do it also. So we were very interested, and then we continued to sit there to actually listen to what they have, and then they actually started to do a demonstration on this vacuum cleaner. So then, of course, after that, we signed up, and before we left, they said that how we pay you, you actually have 2 options. We actually have 2 options. One is you get paid a fixed monthly salary of $900, fixed salary $900, and then the other one you get zero. You don't get paid. You don't get paid, but you can potentially earn more than $10,000 if you are able to sell the vacuum cleaner. And of course, having our dear friend there who is actually making a few $1,000s a month before us, we said, okay, why don't we take the way where a full commission, no salary, doesn't matter. We try our luck. Yeah, since our friend can do it, we also can do it. So then our journey as a vacuum cleaner salesman actually started there. And then they said, come over for work the next day. And then we came over for work the next day, and they gave us a briefing and said that today we are going to Bangsa. Okay, today we are going to Bangsa, and these are the place where you need to actually cover. And they told us before we went, we did a short training. They told us this is actually the manual, this is what you do, and the first thing you need to do is actually go door to door to actually knock all those area in Bangsa, and start to actually ask for a demonstration, ask for a free cleaning demonstration. So we are not really selling vacuum cleaners at that time, but we are going to clean other people's house. We are going to clean other people's house to offer a free cleaning, I think worth $150 or something like that. Yeah. So then they put us on a van. They put us on a van, and then they actually brought us to Bangsa. And we started what we call canvassing. Canvassing is actually going door to door. Yeah. In the past, these are very common. Nowadays, if you go canvassing, people will lock the door. People will lock the door and think you are going to rob them. Yeah. But in the past, people are more open to talk to you, to let you into their house, even they do not know you. Yeah. So we were actually going to Bangsa and doing canvassing and knocking the door and asking people, would you like to have a free carpet cleaning service? Yeah, we are promoting this. We have a vacuum cleaner and we are actually doing a demonstration. We would like to have your comments about this vacuum cleaner. So we are not saying we are selling. We didn't say we are selling. We are saying we are going to give a free demonstration for cleaning their carpets or their house. Then, of course, a lot of people said, oh, why not? Why not? Since it's free. Then they fill up a card. And then we took back the card and say they are interested. Okay. So that is actually the first point of contact, first job lah. Then after that, we went back to office, and the next day, we went back to take all of the cards which we gave. We started to do calling for booking appointments. So then, of course, what happened was that they gave us a script. You just say call and then read the script, and then your target is to get an appointment for the free demonstration. So then, of course, we called the whole day, and on top of those calls card which we had, they gave us another stack of contact lists. We don't know where they get it, but it's a list, and then you say you finish up all this. So that was actually the second day. I think we were doing 3 days canvassing. No, 3 days canvassing, 2 days calling. And on the Saturday and Sunday, we are going to do the demonstration. Most of the time, they call us to go during weekends. So then, of course, when we started to actually do demonstration, first thing is we clean their carpets. With the vacuum cleaner. So of course, these carpets, besides cleaning, it also washes the carpet. Like dry cleaning, it washes the carpet with foam and all these kind of things. So it's not a normal cleaner. So then we clean the carpet, and then after that we ask them, do you want to clean your sofa? Okay, why not clean the sofa? After that we ask them, do you want to clean your curtain? They said, curtain? Vacuum cleaner? Clean curtain? Then of course they said, if you can clean the curtain, then you clean the curtain. Then we started to clean the curtain. They said, need to take it down or not? No, we just clean the curtain. So we started to clean curtains as a third step after the sofa with foams and all this. So by the time we clean the curtains, they are very happy. They are very impressed with all our work. Then we said, the vacuum cleaner can also do one more thing, which is very important, because this one will make you healthy. Okay, I said, how can a vacuum cleaner make you healthy? You only clean all the dirt. Yeah, because one of the things which is people don't know is actually about bed bugs. They say this vacuum cleaner can clean your bed. Okay, why don't we show you a demonstration? So then, of course, we started to go and clean their beds. So of course, after we clean their beds, then we shown them basically how much dirt we collected. It's actually fully black, black color, all the dirt. You 5-10 years, you never clean your bed. People never clean their bed, but sleep there every day. So they are sleeping with all these bed bugs, which actually eat your blood, and you have all these eczema problems is coming from that. So after we clean their bed, they are totally sold that this product is number one. They never seen a vacuum cleaner so good before. Then of course, after we finish, we started to actually do the closing. We started to do the closing means that we are going to promote and ask them to buy the vacuum cleaner. So then I'll say, we finished the demonstration. Thank you so much. and we hope you like it. We just want to actually ask you a question. And the question which we asked is actually, we asked if money was not a problem. If money was not a problem, how would you like to pay for the vacuum cleaner? Would you like to pay cash or card? So we didn't ask them whether they want to buy or not. We just straight away asked them, if money was not a problem, how would you like to pay for your vacuum cleaner? Cash or card? So then, of course, and then after that, we started to use some of our things they taught us, also some psychology, some NLP. And when we asked them the question, we started nodding our head. How would you like to pay for your vacuum? Would you like to pay by cash or by card? Then we started nodding. Then they also started nodding. Yeah, card will be good. then actually we close the case, and then they get sold this vacuum cleaner. Of course, it's not that easy lah. I didn't sell my vacuum cleaner on the first day. In fact, I did it for about 4 weeks. I did it about 4 weeks running around, and only at the fourth week without any success, I was able to sell my first vacuum cleaner, and this vacuum cleaner cost about $9,000 ringgit. 9,000 ringgit. So again, I was very happy, and I got a commission of $1,200 back then. And some of the other friends which came together with me didn't sell one. And after I sold that, then I was happy with the money. I took the money, and then after that, I stopped working. I stopped working there because it's a good experience, but it's not easy. It's not easy to actually do this type of work. But the learning experience was very good. And up till today, the things which I learned from this experience continue to be with me. And in fact, when I started to actually learn more about sales and marketing, the techniques which they taught me more than 30 years ago, is still applied. It's still applied today in the sales world, in the sales and marketing world. Yeah, can you imagine? So again, what the moral of the story behind is that things actually do not change in time. Yeah, what we had in the past 30 years is actually still around with us, up till today. Okay, but of course, when we are young, we actually imagine a lot. Imagine what we can do, if we can make money, what we can buy those things with. And of course, after a while, when we actually started to work, right? We really started to go into the normal tone on the normal mode. We started to actually lose this imagination. We are trained like robots, like just go to work, come back, go to work and come back. We lost this imagination. And of course, because we lost this imagination, a lot of things were no longer possible for us. We do not dream big anymore. And we just go on life the normal way. Yeah. And of course, a part of us which can achieve more is sunk inside. Yeah. Until a stage where you guys start to imagine again, dream again, then of course those things which you were hidden deep inside when you are young are actually taken out. So this is actually very important for us to know that everybody have all the skills that they need to actually generate income and also succeed in life. Yeah, it's just the little thing that you need to actually bring it out and put the imagination out. Yeah, put the imagination out so that it actually can give you can actually bring you to the next level where you can actually be more successful in life. Yeah, and I leave you guys with this word from Albert Einstein, which is imagination is everything. Yeah. It is the preview of life coming attractions. Yeah. So this is what he says. Imagination is everything. Yeah. It is the preview of life's coming attraction. Yeah. So this is what he says. Yeah. So if you want to actually achieve great heights and all, first you start to imagine first. Yeah. after you can actually imagine it, you can start to feel it inside your head, and basically your body or your mind will actually take the action to actually achieve that. Yeah. So that is my little story while I was actually young, and how it actually brought me to actually this state right now. Yeah. And if you like the story, give me a thumbs up. If my story is very bad, give me a love. Okay, great. So we'll move on. To the markets. Actually, yesterday was very scary, right? Okay, for those who are in the markets, yesterday was actually very scary because the market dropped. People don't like the market to actually drop, right? And of course, the market dropped yesterday. Let me just put this up here. The market dropped actually at 75 points. S&P 500 index actually dropped 75 points yesterday. And it actually dropped more. It actually dropped more, about close to 100 points. But of course, it actually bounced up before the end of the day. You can actually see here, right? You can actually see here, this is actually the NDX. I want to actually put SPX. Yeah. So this is SPX. You can actually see here that SPX actually dropped and touched the 100 EMA, touched the 100. It dipped like a bungee jump. It dipped and touched the 100 EMA and actually gone up and form a bullish pin bar. You can see this is actually a bullish pin bar. Okay, and of course, what I said earlier, if you follow me in my newsletter, also the Facebook postings, right? What I said that NDX has actually SPX, S&P 500 has actually bounced for about 8 times this year. About 8 times this year, it has actually bounced. This is 1 time, 2 time, almost touching 100 EMA. 3rd time, 4th time, 5th time, 6th time, 7th time, 8th time, 9th time. So this is actually the 9th time. This is actually the 9th time. And I said in the newsletter that this time round, it is actually not as easy as the previous dips, because what happened in the most of the previous dip, except the one in March, right? It actually went down one day, and then the next day it actually went up. You see all the candle stick, right? It goes down one rate and then touch the next day, it actually gone up. Yeah, this is even on the same day it went up. This one day go down, next day go up. This one one day go down, same day go up. One day go down, next day go up. One day go down, next day go up. One day go down, next day go up. So this one, if you look at this, it has actually been how to say, it has been pushing down, but there are also a lot of resistance going up and going down, going up and going down. And if you see all the week before, actually about 2 weeks before, this were actually a lot of long red bars, When we have long red bars, means that the intraday movements, right? The intraday movement of the markets is actually quite big. But at the end of the day, what happened is that the share price closed lower. Same like yesterday, you see that the intraday movement, it actually went close to about 100 points down. Yeah. And then it went up again to close at about 75 points down. Yeah. And of course, all these were caused by some fear mongering in the markets on this China side, where there's actually one of the largest property developer, Evergrande, right? Evergrande is going to default in its loan. Yeah. So of course, this is actually the story which was quite heated the whole of last week, and is actually escalated and pushed over to this week, and that has actually caused a bit of uncertainties in the market, whether China would drop, and this would actually flow through the market in the US. Yeah, and of course all the China stock dropped the week before. Yeah, so all the China stocks was dropping like flies, and of course only towards the last Friday, the stocks actually recovered, mainly because the CSI 300, the China Shanghai Index, right, was bullish. That means it ended Friday with a green bar, and of course that escalated over to the US market at the night, where the Chinese company went up. Yeah. And of course, this week it continued to go down. Yesterday Hang Seng went down about 3%. Yeah. China was closed for the Mid-Autumn Festival. China was closed on Monday, but Hang Seng opened and Hang Seng dropped 3%. So of course, that fear again escalated to the US market. So today China is holiday, Hong Kong is holiday, so there's no market. So I assume today the market would be a bit green. Before I started the show, I saw that the futures were up. And I would say today the market is green because there is actually no benchmark on what happened in the morning in the China or Hong Kong market. Yeah. And of course, that will again change on Wednesday, because on Wednesday there's another Fed meeting, and people would actually look as usual. What are they going to say, and also to see what is happening in the China or Hong Kong market in the morning. Yeah. So I would say this week we would be probably going a bit sideways. Of course, the market players would actually want to push the market up. Yeah. So there's going to be a bit more resistance at the 50 moving average, and of course, if we are able to actually push through above 50 moving average, then you might be able to see more greens lah. Yeah. But of course, if you are unable to actually push through the 50 EMA this week, it is going to be either sideways, or it's actually going to continue to actually come down a bit lah. So that is actually my view on the S&P 500. And of course, on the Nasdaq side, it would also be around the same kind of trend as compared to SPX. And of course, if you look at Nasdaq, the jump will be actually steeper. Yesterday, Nasdaq actually lost about 300 points. So all the stocks like Facebook, Apple, Netflix, Google, Amazon, all of them was actually down. In fact, Amazon went down quite a lot yesterday. So for those who have positions in the market right now, bullish positions, of course you will see some red. Like I mean, in my portfolio, is also very red lah. It is also very red in the past. I would say a few days is also very red. But of course, we cannot do anything because the market wants to go down. I mean, it will go down. I mean, of course, on the longer term, we hope to see the bullish momentum coming back. So in between now, what I have actually been doing is wherever there is actually a possibility, I am actually placing some positions on the. That means placing some a bearish position on some of the stocks or some of the index, and of course these are short-term measures which is being implemented to actually cushion off the other positions which are actually showing red. So while it is actually not going anywhere, so I'm placing things like spreads. Bear call spreads on some of the stocks. I've placed some on Apple's since last week, and also the index like the IWM Russell Index and all. Google also I have already exited the position after the profit targets are achieved. This was actually put on last Thursday, only about 2 days. Then they actually achieved the profit targets of the, because all of them actually dropping, right? So So these are some of the cushioning. I mean, of course, it won't cushion 100% of the positions. It's just to make some money while the market is actually going down or going sideways. Yeah. So great. So that is actually on the overview of the markets. Yeah. So keep a watch on what's happening this week. And then hopefully it goes like the eight bounces and starts to actually go back to new highs after this. But I think it will be a bit protracted. I think it will be a bit protracted this round because of the problems on the China companies, which people might actually think that it's going to bring a systemic burst on the whole property market, and eventually will escalate, like the case which they had in the past with Lehman Brothers and all these kind of things. But I don't think that it will actually go that way, knowing the Chinese government. They will actually implement some measures to actually curb them. But what measures they are, I mean, I also don't know, is it? So we'll need to actually watch and see. And today I actually want to go through the topic, right? Since the market is actually not going anywhere, and some of you might not have nothing to do, right? So I actually going to teach you some new option strategy. If you do not know them, it's a good time where you can actually learn this today. Let me just change this screen. Okay, today I'm going to actually talk about this thing. Uncertain times ahead, right? Up or down, we do not know. So while waiting, basically, we can actually do some cheap trades, very cheap entry trades, which will give you 5 times or even 10 times the return on investments on your trade. So basically, this is actually betting with low cost, high ROI strategy. How many of you guys would actually like to learn very low cost but high return strategies? Yeah, how many of you would like to learn? If you like to learn, give me a thumbs up so that I will share this with you. If I don't see thumbs up, then probably I would not be so interested to actually teach you guys. Yeah. Okay, great. So this we will go. Firstly, before we actually go to that, I actually also wrote about expected move in the newsletter. Okay, so I actually want to talk about a bit about this expected move. When we are actually trading options, right? When we are actually trading options, I do not know if you guys know about this thing called expected move, because a lot of people I see that they just buy calls, and they see that there's potential, they just buy calls. But do you know that when you buy when you trade, or for any expiry periods which you guys trade, right, there is actually a number which is actually shown there, plus minus number. Do you guys know? Are you guys aware? If you are aware, give me a thumbs up so that I know that you guys are aware of this. Yeah. If you are not aware, give me a love so that I know that there are still people trading the markets without knowing the basics of this. Yeah. Okay, great. So what we call that thing is actually what we call expected move. I will show you in the platform where this expected move is actually shown. What this expected move is for every date of expiry. Say for example, we pick a date of expiry of 19th of November. Yeah, the next the following monthly expiry, which is 19th of November. So if I take today's price, Facebook, right? Facebook today, yesterday it closed at 355.7. Okay. So what the platform will tell you on 19th of November, there is actually an expected move of plus minus 45.15, 45.14. So what this expected move is actually saying that by 19th of November, Facebook share price will either go up by 45.14 or go down by 45.14. So this is actually calculated for you in the platform. Yeah, but of course, for those guys who want to know the formula, this is actually the formula. The formula is share price times by the implied volatility times by the square root of the expiry date. Expiry date of 19 November would be how many days? 59 days. Yeah, 59 divided by 365. So with this formula, you will actually get a number close to this. Yeah. Different platform will actually have their own method of calculating, but generally, the formula for expected move is this. Yeah. And of course, what this expected move, as I said, it will go up or go down by this number. And this is also what we call one standard deviation move. One standard deviation move. If you guys study statistics and all in school, so what this one standard deviation means that it is actually a probability estimate of one standard deviation will give you an accuracy of 68.2%. Yeah, one standard deviation move will actually give you an accuracy of 68.2%. So what it means is that till 19th of November, the probability of Facebook to move up or down by 45.14 will be 68%. 68%. Yeah. So of course, we as traders, especially traders on the selling side, that means when we sell options, we always use this kind of expected move and also the standard deviation standard deviation, and also the probability of profit, the accuracy to actually plan for our trades. And some of the trades we actually use we actually use these metrics to place our trades. That means when we do our trades, we do not need to actually think whether it's going to go up or going to go down, because here is they say either going to go up or going to go down, right? And the probability is 68.2%, right? So we can actually go on both sides. We can actually plan for a bullish trade, yeah, with 68.2% accuracy, or we can also plan on a bearish trade with 68.2% accuracy. So that's why I said earlier that last week when I actually looked the market, it's actually going to go down, right? The tendency or moving sideways, right? Then I start to actually place some bear call spreads. If you guys do not know what is bear call spreads, you can you can search Google and check out what is this strategy. So I start to just place bear call spreads at one standard deviation move, which is this standard deviation, and then just wait, and of course, if the direction of this goes down, because bear call is actually you want the price to go down, right? If the direction actually goes down, then the premium will decay faster, and you actually make profit faster. So of course it went down a lot. It went down a lot since last week and yesterday. So the positions went to I think most of it I actually placed a 50% profit target, GTC. That means auto exit. Good till cancel auto exit, and of course a few of them actually went to the profit target while I was sleeping yesterday. Yeah. So this is how we actually use this kind of metrics to place trades without really thinking it will go up or go down. Yeah, because at the end of the day, whether it goes up or go down is only a coin toss, and of course the charts and all may give you a bit more comfort psychologically, but at the end of the day, if you want to go up, it will go up. If you want to go down, it will go down. Yeah. So us as traders, it will be very difficult for us to actually predict. So when we do trades using metrics like this and according to the strategy, then we can still be profitable whether it goes up or go down. Yeah, as long as it does not go beyond your strikes, then of course you will still profits. So today, what low entry cost, high expected return strategy I want to actually teach you guys is actually what we call a butterfly. Okay. And of course, this is a nice blue butterfly, and I will show you how to actually do a butterfly trade, and basically how much it costs and what kind of returns that these kind of trades can actually give you. So of course, the thing on these butterfly trades, right? One thing is you need to actually know is that you need to actually guess where the price will land on expiry. For example, if you are doing a trade expiring tomorrow, which is 22nd of September, you would have SPX trades or SPY trades which expires tomorrow. Yeah. So if you saw that SPY was actually somewhere here, right? And you can actually either use that expected move to plan where it will land, believe in the numbers there, plan where it will land, and place a trade. Yeah. If not, then you do your own guess. You do your own guess. It's like buying lottery lah. It's like buying lottery. You do your own guess. But of course, as I said, my expected move here is that it might go sideways in the next days. So yesterday I actually placed a trade on SPY to say that it will actually my guess is that it will go to about 4440. Yeah. So SPY, I did a trade on SPY of 440. So I actually guessed that SPY will close at 440 tomorrow on Wednesday. Yeah, so I did a butterfly trade on SPY, and I will show you that SPY trade which I did and show you how much profit it can actually generate if my prediction is actually correct. Okay, so that is the first thing. You need to know where to get the maximum profit. You need to estimate where the price will land on the expiry. Okay, of course, as I said, second one is you can use expected move to plan for it, or you do your own wild guess or your own thesis where it will land. Of course, the other one is, of course, you can actually use this strategy also to trade earnings. Earnings means that when the company wants to announce results, the price may go up or may go down. And when we trade earnings, most of the time we use the expected move to trade earnings. And basically we will just place a trade, which will just place a trade at the expected move. Of course, if the expected move, because the expected move is always closing on Friday for stocks, right? For companies, right? Always closing on Friday. Then of course, if they make announcements on Wednesday or Thursday, right? Or Thursday, then of course you need to actually start to discount the expected move by multiplying the full week's expected move, by 85%. Yeah, 85%. And that basically is one way which we do it. But I rarely do that. I just make a guess based on that, and I will just place more or less expected move. And if I don't believe so much on that it will go full expected move, then I will just make some discounts myself. Yeah. So that is one cheap entry to actually do earnings. Yeah, because we do not know which way it will go. So we are only willing to pay a very small price. But if we hit the jackpot, then of course the returns can go up to 10 times or more. Yeah, 10 times or more. Yeah. And of course, because this is actually a low entry trade, then of course the probability of you hitting it is actually very low. Would not be more than 20 to 30%. Yeah. And this is actually what what is that, the risk profile will be when you actually enter the trade. Yeah, so when you enter the trade, assuming you actually pay say 20 cents for this trade lah. Yeah, this is actually the one which I simulated for Facebook just now. Facebook to actually do a trade at 3. What did I do? This is actually I placed it at, I target Facebook by 19 November would go up to $310, which is this middle line here, $310. So that is my expectation. Facebook by 19 November will actually go to $310. Yeah. And then with this, I actually go down by $5 with $5 minus 5 and plus 5. Yeah, so this is what the risk profile would be. I think the trade was about 20 cents, and the max profit you should get on expiry is how much? Is $480 here. Yeah, this figure here, 480. Maybe you would not be able to see. Okay, but of course, I rarely do butterflies for a longer period. Butterflies, I use it for very short term. Maximum I will go is 1 week. But most of the time I will do it only for few days, within less than a week. Yeah, because the longer it goes, right, you do not, it is more difficult to predict where the price is. Yeah, so we'll do it for short period. So in this example, I actually shown you, it is actually 19th of November, just to actually give you more about this expected move. But the butterfly trades normally short, very short trades, 1 week maximum, if not a few days. Yeah. And then how to do it, how to actually do it. Okay, the other thing which I want to tell you on this trade is that the maximum profits will only be reached at expiry. At expiry means that if your expiry, say it is tomorrow, say if it is 22nd of September, if your expiry is 22nd of September, the max profit you will get is 4 a.m. 3:59 a.m. if it falls within this band, because the blue or purple line here will actually go up in time. Yeah, when this purple line go up in time, means that the profit will actually increase. Your profit will actually increase. Yeah, but of course, it needs to, you need to wait lah. So when you trade this, on stocks, you want to get the max profit, you don't sleep. You wait close till 4 o'clock to actually get max profits. But most of the time, I would close the trade somewhere if it is within this triangle here. On the last day expiry of the trades, I would start to actually close the trade. If it is 20%, 30%, or 50% profits, I will just close the trade and I would not wait, unless you are actually trading SPX. Unless you're actually trading SPX, because SPX is actually cash settled. Cash settled means that you do not need to actually do anything. It will be cash settled. But of course, again, although it will be cash settled lah. So you did not worry about assignments and all these kind of things, because it will be cash settled. If you trade stocks, make sure you close it. Otherwise, if one leg goes in the money, then of course there may be possibility of you getting assigned the stocks. Yeah. So when you trade stocks using this, please close. If you trade SPX, if you do not want to close, it's fine, because it will be cash settled. Yeah. But most of the time also SPX also close lah. Yeah. Just so that we can actually sleep. Yeah. Okay. So then I will go through the example how you actually can do it in the platform. How to actually execute this trade. Executing this trade is very simple. For those who train under me, you would have already learned one leg of this. Yeah, I just need to share with you some other legs. Okay, this okay. Okay, you see this is actually the trading platform. So let's do SPY lah, SPY. Okay, SPY. Can you see? Okay, so this is actually SPY. Why the screen like that? Wait. Okay, good. So this is actually SPY. As I said, I did a trade on 22nd of September, right? 22nd of September, right? So let's see if 22nd of September still can or not. Yeah. I said that it will go to 4440, right? Means that I am bullish. I'm bullish. So what you do on this trade is very simple. For those who use Think or Swim, you just press Control. Press Control. Okay, you target the price will reach 4440, right? So this is actually 4440 strike. 4440 strike is here, and you need to actually sell 2 calls. If you are bullish, then you sell 2 calls. If you are bullish, you sell 2 calls. So the 2 calls here is 81 cents, right? So you click you can actually click 2 times. Okay, then you see you have 2 calls here. Okay, 2 calls, you are actually going to collect 80 cents each. And then you do the wings. Okay, because it's a butterfly. What is a butterfly means? You got a head. The head is the 2 call which you sold, which is your target price. Now you actually add your wings. Okay, so you can actually add however with the wing is lah. But of course, the bigger the wing, the higher your probability. The bigger the wings, the higher your probability. But if you want to have a big wing, you need to pay more. You need to pay more to have a big wing, so that you can actually catch all the price. So we can test what kind of price we can actually get if we do a small wing or a big wing. Since I'm actually going to say I want a cheap entry and a low cost, right? I will try to actually go on the lowest possible first. I will just do a very narrow one, which is just 1 strike difference. That means $1 difference. So just now I did 4440, right? 4440. Now I actually add 1 wing on the bottom, which is $1 difference, will become 439. So I actually buy a call 439. And then on the other side of the wing, which is the upside, you do one at 4441. Same difference, same strike difference. So if you see here now, it is actually can you see actually? Let me check. Okay, you can actually see now that the price for this butterfly is 5 cents. Only 5 cents, only 5 cents, cheap or not? This butterfly very cheap. Okay, let's see how much this butterfly can make. Okay, okay, this butterfly can make $95. So basically, for $5, you can actually make $95. So how many times is that? 20 times, right? My math's very bad one. So how many times? Yeah, 10 times is 50 lah. So this is actually 20 times. So 20 times, can you imagine that you only pay 5 cents, and okay, if you strike the lottery, you can actually get paid 20 times. 20x. Okay, and let's see. This is 95. You pay $5 plus the commission. The commission is 260. If you disregard, then you just say 5 and you get 95. That is $1 strike. Okay, of course the probability is very narrow lah. I will show you the probability where how it is. You click analyze trade, right? Okay, so when you click analyze trade, how come it's not showing? Wait, what's the problem? Too cheap. Cannot show. Something wrong. Okay, let's do it again. Here, let's here. Analyze trade. Okay, I don't know why it is actually not showing. 4440 is here, ma. 444 is here, ma. The trade is here. Oh, sorry. I think the wrong one. No, Korea. 5 cents. Let's do it again. Analyze trade. Trade. Too narrow, you don't want to show, is it? I don't know what's the problem. Okay, let's change this. Let's change this maybe to a different strike to see if it's a. Normally it's okay. Let's change this to 2 strike. 4442. Okay, then it goes to 20 cents. I think yesterday the one which I did was 20 cents. Yeah. You do analyze trade. It's still not showing. What's the problem? Let's see. Never mind. Let's send this trade first. Send. Okay, trade analyze. Okay, here it is. Here is showing now. Okay, so this is actually two. Okay. Okay, this is the one with 20 cents one lah. Okay, I show you the 10 cents one. Okay, this is the one 10 cents one. 10 cents one. You can see that your probability is very slim. Your probability, your chance is only this narrow band, you see. So too narrow normally I won't do because it's like really trying your luck lah. I would do basically $2 width lah, $2 width, which is this lah, yeah, which is this. Then you can see this is actually your butterfly. Okay, so how much this can earn? If $2, you can actually earn a maximum of $180. So for $20, you can actually earn $180, close to 1 to 9 times. 1 to 9 times. Yeah. So pay one, get up to 9 times return. So this is actually what we call a butterfly. Of course, this is the line, and of course, close to expiry, it will actually go up here. So if tomorrow you see that if SPY close 4440, remember to comment in my chat that I strike I strike lottery that I did a very low cost trade with a very high return value, very high return value. So this is what we do, butterfly. Remember, to sell two calls, and then set the wing, buy two same width wings, buy 2 call. Okay, that is actually assuming you are on the bullish side. If you are bearish, then it is also just the opposite. If you are bearish, then it's just the opposite. If you target it to go to 4330, then sell two puts, and buy one put above, and buy one put below, and buy one put above. Yeah, same width. And this costs 14 cents. And again, the probability is again 1 to 9. Yeah, or more than that actually. This is more than 1 to 10. Going to about 140, going to about 1 to 14 or 14. 16, 1 to 16. Yeah, based on the strike which I've chosen, mainly because it's actually further out of the money. Yeah. Okay, great. So that is actually my butterfly. If you like the strategy, if this is the first time you're learning this strategy, try it out on the demo platform first. Try it out on the demo platform first to see how it works. And of course, once you are comfortable how it works, you can actually do some trades, whether it's earnings or whether it is on SPY, like the one which I did. Yeah, to just try to actually get great returns, low pop, low probability, but high returns. Yeah. So again, that is actually the way the option world works. Of course, if you get a low price, then the returns they will give a low probability, then of course they will give you high returns. Yeah. If you take a high probability trade, then of course you need to actually give up your returns. So that is the basic of the options trading. Yeah. So that is actually all from me today, and I hope you guys got some value and learned something new. And of course, do catch up with me next week, same time on Traders Talk. So until I see you next week, please remember to train, trade, and thrive. So I catch you guys next week. Bye bye.